Good morning, everyone. I'm Liz Vibber with the firm of Bergvall Company, and Cindy Bergvall, also from the firm, will be presenting this presentation on the PPP Loan Forgiveness. I'm happy to inform you that she stayed up late until the evening updating the presentation based on the legislation that has been passed last evening. So we'll talk about those anticipated changes. We will be using the chat box for questions. So please utilize that function, and we will upload this to our website upon completion, so you'll be able to view it in the future. So at this point, I'm going to turn things over to Cindy Bergvall for the presentation.
Good morning. Thank you so much for attending. I am incredibly grateful that the legislation was passed last night and not tonight, so that at least you can get up to date on the very latest changes. Because the legislation was just passed last night, the way this works is, the legislation gets passed. It's expected that the president will sign this into law. And then the Small Business Administration, the SBA, they will look at the legislation, and then they will put out practical guidance on how you will apply this in real life. So what we've done is we've looked at this, the actual bill from the House that the Senate approved yesterday, and we've gone through that and said, based on what we're reading, it looks like this will be the application. So again, some sort of flux, but as the days go by, we're learning a little bit more and more. This is as close as it ever gets to breaking news in the world of accounting. For those of you who have been following this loan carefully, I think you're going to be very, very pleased and encouraged by some of what we'll see. These are extraordinary hard times, and it's really good to see the legislation change to accommodate what we as businesses are going through. I know a number of you on the call are not clients of Bergvall. You are certainly welcome to contact us afterwards for questions. If you so choose, you can even engage us, to help you with the forgiveness application or to answer your questions. And you can just carve that out and still stay with your own accounting firm, or go back to go to your accountants. We're going to share the slides. Take your slides and say, hey, this is what I'm hearing. This is constantly changing. So I will be attending other seminars in the coming weeks to learn about this. You'll see other things. So take this information to your own accountant and your lawyer before proceeding. So throughout this presentation, I've changed things in red. And the reason I did that instead of replace that is I want you to see what used to be and what is now. I know some of you have really stayed on top of this, and that way you can clearly see what was and now what is right now. Additionally, you'll see to this slide, there's the full text of the act is here as well. So just in case you haven't been following this as closely, just to recap, the Paycheck Protection Program loan covers payroll. It's an opportunity, you receive the money, and it's an opportunity to get that money that was loaned to you forgiven. Probably
should be muted. Oh.
In many of your cases, you will find that you will be able to get 100% forgiveness now, and I was not able to say that when I gave this seminar on Tuesday.
You can take yourself off.
We will go into more discussion about what payroll is. We'll go into more discussion about what utilities and rent and mortgage interest mean. So the change last night, your non-payroll costs, such as utilities, rent, and mortgage interest, cannot be higher than 40% of your total spend. So if you have a business that is very real estate focused, you have a lot of rent because of your building, perhaps a retail store or a manufacturing company, more of your rent can go towards forgiveness now. The big change that will help so many people, instead of 8 weeks, you now have 24 weeks to spend these funds. So if you haven't been able to hire everybody back yet, if you haven't been full operation in operations, you're going to have more time to spend this money. As I mentioned, it's an opportunity to forgive all or part of the loan. There could still be some circumstances where part of the loan will not be forgiven. If that is the case, the part at the time it's determined what part is not forgiven, the loan will term out to a monthly loan, and it will be paid over each month, and now it's over 5 years instead of over 2 years. So that's a really helpful change as well. So what do we mean when we talk about payroll? Your gross payroll is your salaries and wages that you pay to any of your employees. It could also be salaries and wages to yourself if you are on payroll. So if you get a paycheck and you get a W-2 at the end of the year, you are included in this calculation. There is a limit. It's a maximum of $100,000 per person. So anybody that makes, let's say somebody makes $105,000 over the course of the year, the intent was to limit how much you can use towards forgiveness. So the amount that you can use towards forgiveness is limited. When it was 8 weeks, the amount was $15,385. Basically, 100 divided by 52 times 8. I suspect that maximum will likely change to $46,154, which same calculation. The weekly amount times 24 weeks. So the equivalent would be $46,154. You can also say include bonus and hazard pay. Some of you have had employees that have worked under very challenging circumstances in the last few weeks. A bonus or any type of hazard pay that's paid during this time will be included. Also included in payroll costs is the employer share of health insurance, the employer share of pension, like a 401k plan, and the employer share of state unemployment taxes. Health insurance, pension, and state unemployment are not limited to that cap, that whole idea of $100,000 per person. So if you have somebody that's making $100,000 per year and you pay their health insurance, that health insurance cost gets added to that payroll calculation over and above whatever they've been capped at their $100,000. I'm pausing, and then if Liz sees any questions in the chat box, she'll jump in. So please feel free as we go if you have any questions. So the measurement dates. The measurement dates, now that it's extended for 24 weeks, really become less of an issue. Before, it was very difficult. If you remember, when you applied for the Paycheck Protection Loan, it was calculated on 2.5 months of pay, but you're only allowed to use it for 8 weeks pay, which is less than 2.5 months. So it became a little bit of a conundrum to try to really spend the money. Now that it's 24 weeks, whatever pay period you start on and whatever pay period is included in that 24 weeks, it's really much less of an issue. So the idea of the pay date versus the date that payroll was incurred, it's really a non-issue at this stage. Does anybody have any questions on that? Because that is a pretty big change. We can, if you have questions that you think of later on, we can certainly go back to these slides. So basically, your payroll has to be at least 60% of the amount that you're proposing to get forgiven. Other non-payroll costs can be mortgage interest. So you have a property that you own and you pay mortgage interest on property. This does not include credit card interest. It doesn't include interest if you have financed the purchase of equipment. So if you have equipment loans and you're paying interest on the equipment loans, this is only mortgage interest on real property. In contrast, though, rent includes rent on both real and personal property. So if you have a copier lease or equipment leases, you can put your rent expense towards these non-payroll costs. The other costs that are included are your utilities, gas, water, electric, etc. When it was looking hard for people to squeeze all their costs into that 8-week period, we would say things like fill up the propane tank, fill up the oil tank, There's actually even a provision on the measurement date that you can count several different periods. Again, you have 24 weeks to spend this, so it's going to be very easy to meet that amount, those amounts through there. The thing that you need to be careful of, we have a number of clients who might have rented their company 20 years ago. So they might not know where the lease was. You know, you get those documents. You need to have a lease in writing. If you cannot find your lease, you need to draw one up and date it prior to February 15th, because you certainly, if you've been paying it all along, it certainly was effective prior to February 15th. But some of the documentation that you might need to submit to the bank to get your loan forgiven is going to need this lease. So make sure that you have all these leases. If you have, you know, if you're going to submit to get rent reimbursed for your copiers or your equipment, you need to get copies of the leases that you have for your copiers or equipment. So if you can't find those, now's the time to contact your rental place.
We have a question
Okay.
regarding applying for forgiveness after 8 weeks.
Okay, good. We will get to that very shortly. So don't let me forget that one. Thank you. As far as the timing, as far as when you're going to apply for your forgiveness. Thank you. That'll be good. So then we think about, okay, what's the measurement date for payroll costs? Again, not a big issue anymore. However, what's very interesting about the guidance, there's an example on page 12 at this link here that you can see on your slide. It seems to indicate, actually it does, it's very explicit. It has an example that says that you could actually include 3 months of your utilities within that 8 weeks based on when you're actually paying and incurring the bill. So you get your loan at the end of April, you haven't paid your April electric bill yet, you pay your April electric bill, you pay your May electric bill, you pay your June electric bill in early June, all 3 months are forgiven. The explanation was that SBA didn't think those amounts were so large that it really mattered. The reality is that simply is, it's not an issue anymore. You're going to have 24 weeks to use several months of rent, really a non-issue at this point. Okay, so this gets a little confusing as far as the forgiveness calculation. One of the things that Congress wanted to do is, part of the reason for giving businesses this loan is they wanted to reduce as much as possible people that would be unemployed. So the goal of this loan was to keep people employed. So these provisions are aimed with that in mind. And we'll dig a little deeper on some of these. So with payroll, you need to maintain your head count. We'll look and see what that means, what they mean by head count. And you couldn't cut anybody's pay by more than 25%. So either salary needed to stay at 75% or their wage rate. So if somebody was making $10 an hour, you couldn't cut their wage rate below $7.50. I think I've gone below the minimum wage anyhow with that example, but it was easier to do the math in my head. If you don't meet these levels, the forgiveness would be reduced proportionately. Oh, I missed this. Okay, payroll needs to be at least 60% of what you would spend. So you actually have to spend the money. So it's one thing to keep up the head count, but you actually have to spend the money as well to get it forgiven. Again, the money needs to be spent within 24 weeks from the time the deposit was made into your bank account. So what do they mean by head count? Head count is based on full-time equivalents. You have the option to use the old legislation said, you know, this year compared to last year. So February 15th to June 30th last year compared to February 15th to June 30th this year. And if you can maintain the same full-time equivalents, and I'll define full-time equivalents on the next slide, you will have maintained your head count. Or let's say your business declined over 2019 compared to 2020, you can compare FTEs from January 1st to February 15th. And how were you beforehand? It is the way the legislation is written. It says that every spot in the old legislation where it said June 30th, you're going to exchange that with December 31st. So now what I suspect this will change to is February 15th, 2019 to December 31st, 2019, and compare that to February 15th, 2020 to December 31st, 2020. Now, if it seems very difficult to imagine what your business will look like over the next 6 or 7 months, like you're probably thinking, I have no idea if I can do that. You might be a business that's going to be able to open tomorrow for the first time, and you don't know what things will look like. There is an opportunity to come into compliance. We'll go over that very shortly. But by extending it to December 31st, it gives you more time to get your business recovered. And a number of economists, I'm not saying the right, economists believe that things will start to get better over the period of 2021. Same situation with the smaller time frame, still January 1st, 2020 to February 15th, 2020, but you're going to compare it to the FTEs on average between February 15th, 2020 to December 31st, 2020. So what do we mean by FTEs? Just like you have an option here, you have an option for FTEs. It can be either a pure mathematical account. So if somebody works for you 10 hours a week, 10 divided by 40 is 0.25 FTEs. If somebody worked 20 hours a week, 20 divided by 40 is 0.5 FTEs. Or you can just say anybody that works less than 40 hours counts as a half a person, counts as 0.5 FTE. I would encourage you to look at both and determine which way works out more favorably for you. They also are pretty clear that 40 or more hours is still 1 FTE. So if you have somebody who's been working, 60 hours a week because other people haven't been able to come to work, that person does not count as 1.5 FTEs. They're capped at that 40 hours.
Cindy, just to clarify, we have a question regarding one employee declined to come back to work and the owner hired another employee. Would the head count remain the same?
Yes, and that is a perfect lead-in to our next slide. So this is where, when we realized that back in March, when the legislation was passed, at the time that it was passed, to the best of everybody's knowledge, they thought we would reopen more quickly. It's taken much longer than anyone could have imagined. So now they're saying you have until December 31st to rehire your employees. So if you were looking at the last 3 slides, you probably had this awful feeling like, I'm opening tomorrow. I don't know how many people I'm going to need. I don't know how busy I will be. I have no idea what the coming months hold. So you have till December 31st to rehire your employees, or if you had to cut people's wages, you can restore the wages by then. Or to answer the question that Liz just asked, you can hire similarly qualified employees for unfilled positions. So if somebody won't come back, you can hire somebody else. Also, if somebody won't come back, either because they're caring for their children who are out of school, perhaps they're fearful, they could be making more on unemployment than they were with the extra $600 from the federal unemployment piece. There are 5 things that you can see from this list that you need to document that you would show. And if you can show these 5 things, then that person won't count against you. So we come to December 31st, you normally had 6 people, 2 people have said, no, I don't want to come back. The fact that you're down those 2 people will not hurt you. And now that the period has gone from 8 to 24 weeks, you're not going to have any trouble spending that money. Before, what we were running into is this certainly was a very nice provision, but what was happening is if people weren't coming back to work for you, you couldn't actually spend the money in your payroll, and you can't get the money forgiven unless it's spent. So now that it's been expanded for 24 weeks, even if 4 of those 6 employees come back, chances are you're going to be able to spend that paying those 4 employees. So let's look at these 5 things. The first is your offer to rehire that employee that you had furloughed is in writing. The offer needs to be that you're extending to them the same salary, wage, and hours. Now remember, this is by December 31st. So you could offer them to come back now at reduced hours, but as long as you get their hours up by December 31st, that's fine. They need to reject the offer. Their rejection does not need to be in writing. You can just document that, you know, they called you or whatever. If you can get it in writing, especially if you have an email exchange, I would encourage that. You're going to maintain records if this happens. The 5th point is SBA says you need to inform the state unemployment office you made an offer and it was rejected. They're going to give you guidance on how you would inform them. However, you know, in reality, anybody that's gone on unemployment, you've gotten something as an employer from Pennsylvania unemployment or New Jersey unemployment. If not now, you'll get it sometime next month. And the unemployment offices regularly will ask employers, you know, are you willing to rehire this person or something to that effect? And if you say yes, then the person risks not getting unemployment. So somebody can tell you, I'm not coming back, but they are risking that they might not get their unemployment. Does that part make sense? Any questions?
Yes, we have a question regarding hiring. Someone has let me just read the question exactly. It has to do with headcount. One employee who declined to come back, the employer hired another employee. However, they were not similarly qualified. They were 2 different positions.
That's a really good question. I bet a bunch of you are going to find yourself in that situation. So the employee that refused to come back, you're going to follow these 5 steps here. You're going to document that you offered them to rehire. You offered to hire them at their same wage and hours. They rejected the offer. In this case, even if you did not hire somebody to fill that position, this would still count for you. You'd still be good. The fact that you hired somebody, that just helps you spending the money. So that's good. Any other questions up to this part? I have one more thing before we move on from this slide.
Yes, the next question has to do with a sole member LLC with all, excuse me, business gross income comes to that individual, like salary. Anything special they should be doing to ensure forgiveness?
Good. That's a good question. I'm going to circle back to that question after we finish this slide, just so we finish up our topic on furloughed employees, and then I'll come back to that. Thank you.
And I also have a question back to Elise question. So I think we can probably come back to that at the end as well.
That sounds good. I'll do that. The other thing that they added to the act last night, which is so helpful, there's a couple of provisions that if you can demonstrate that your business could not return to the same level of business activity due to safety requirements such as social distancing or the need to set up more, you know, the example I thought of is picture a restaurant. Normally you might have needed 5 people every Friday night. Well, now you're spreading out your tables, and so you can't have as many people, you're not serving as many meals, so now you only need 4 people every Friday night. So what they're saying is if you can't get back up to needing 5 servers because you're not serving as many people, you're okay. That's not going to hurt against you. The fact that you can't hire more employees because your hands are tied because of measures that you need to take to change the way your business operates. That has been considered. So that is another very helpful situation. So think about what you do. If you're a retail store, perhaps you can not only have so many people in your building at one point in time. If, you know, there's a number of different things where the number of people that you can have in your building is now going to be limited, which is going to change your income, but it's also going to change the number of people that you need. And this legislation recognized that. So therefore, December 31st comes, you're still at 4 people, you're not up to 6, but it's because of these reasons that will not count against you. As long as you've spent the money and at least 60% is on payroll, you're going, you know, this is going to be okay. Just like everything with all these slides, once we see the actual written guidance from SBA, this will be much more clear. But it is something to keep in mind as you know, you're processing what it looks like to run your business for the rest of this year. All right, I want to go back to your question on the self-employed person. So the person who has an LLC, I'm going to assume that they do not get a paycheck, like they don't get a W-2 at the end of the day. So there's special provisions for that person. And what it works out to be is that whatever their business profit is, so you think you have your revenues, you have your expenses, and then you have your profit. So somebody who does not get a paycheck and it's their business, that profit is in essence their salary and their paycheck. There is a calculation, I think it's 0.9235% of that number is what you're forgiven. I would double check with your accountant, or if you wanted to consult with us, we're glad to take a look at that. The provisions for somebody in that position with an LLC and also for partnerships are a little fluky, but they're not necessarily as complicated as this because you're just talking about one person and they're working. So it's a much more simplified calculation. It's, you know, here's your profit times a number, that's that. What was the lease question? I'm sorry, the non-payroll cost question, Liz.
Okay, the question was, what happens if your original lease expired and you exercise the option to renew your lease after February 15th?
That will be fine. That's not going to be a problem because you already had the lease and you've exercised your option. So you, in substance, your lease was still in place prior to February 15th. What the legislation was concerned about is that people would somehow say, you know, oh, I always operate out of my house. This is a chance to rent something and get a lease April 1st and get some of my rent, my first 3 months of rent paid by the government because of this program. So, but if you were already renting same place and it was just something like that, it should be fine.
Going back to the sole member LLC, what is the 0.325% factored against?
Oh, I'm sorry. I think the number is 0.9325.
I misspoke.
No, okay, good.
0.9325.
I believe it's against the profit. So it's your revenues less your expenses. You're going to have your profit, which in essence is your salary. And so a certain percentage of that salary is going to be forgiven under this provision. Some considerations. One of the things we had been telling people was to put the money in a separate account so it's not mixed in with your operating funds. And then as you incur payroll and expenses, you can pull the money out of the operating account. What that also helps you do is you don't want to accidentally spend the money. And then if something doesn't get forgiven, you've already spent it. So you get to the point for, you know, let's say you get to the end of the 24 weeks and originally you were awarded $100,000. For whatever reason, you only spent $90,000. you want $10,000 sitting in your bank account, ideally, that you can just turn and pay back. You don't want to accidentally spend it if it was in your operating account and then find out that you were in the hole. If you spend it, of course, it's not the end of the world. It just means you're going to have to pay it back over the 5 years as a monthly. But our feeling was if people put in a separate bank account, they can really consciously move it in to cover expenses that most likely would be forgiven. The SBA application is at the link there. There is a lot of documentation that you would be required to submit. So you'll want to look at that documentation list and make sure that you're putting those things aside. If you have a paycheck company such as ADP or Paychecks, they are putting together forms that should meet the requirements. So it might be as simple as you print out something from ADP or Paychecks and submit that in. But different banks request different things. We saw that very vividly when people were applying for these funds, and it's going to be the same on the way out. Originally, we were advising people to project out their payroll and other expenses to monitor forgiveness. If you have been, let's say, an essential business and you've been able to operate and continue to pay your expenses and payroll all along, chances are you'll be okay. I would still do a sanity check periodically. But when it was only 8 weeks, we were really in a situation that people were very carefully, almost week by week saying, what are we spending? What decisions are we making, just to make sure that the forgiveness could be attained at least maximized. Now that it's extended, you don't necessarily have to project this constantly, but I would, if you're in week 6 or 7, I would just do some sort of sanity check and see where you're headed with this. If you have not been operating, if you haven't hired back your full staff yet, definitely schedule this out, see where things stand, because as you're making decisions, you want to keep this in mind, this idea of forgiveness. You want to make the best decision for your business, but you also want to keep in mind, how can I maximize my forgiveness? Any questions?
Yes, we have a question regarding the loan application. Now that there's new legislation, should we be looking for a revised application, forgiveness
Yes,
application?
definitely. I would bet it will take 3 to 4 weeks before we see a revised application, because they're going to have to, SBA will first come out with the guidance, and then they'll come out with the application. So it probably will be some time. Earlier in our conversation, somebody asked about when do they apply for the forgiveness. So you could apply before the 24 weeks are up. So once you get to the point, as long as the application is up to date and your bank will accept it. So let's say after 12 weeks, you feel very comfortable that you spent all the money, you've met all the exceptions, you can certainly apply for forgiveness sooner as opposed to later. One thing to keep in mind, right now, the expenses that will be forgiven cannot be deducted for tax purposes. So in essence, the amount that you get forgiven is taxable. So as you're looking ahead, if you pay estimated taxes on your business, you'll want to keep that in mind. There is very strong effort to change that, but that's not the case right now. Right now, it is taxable. I have no idea what this will look like, because now that it's been extended for 24 weeks, after the 24 weeks is up, you, the business, will have a time period for which you would apply for forgiveness. And then the bank has 60 days. Should the bank refer your loan to SBA, they have 90 days. You might not find out if this has been forgiven until after your tax return is due next March 15th. But we have enough. Let's not borrow trouble from tomorrow. We have enough going on. We'll worry about that in the future. One thing, keep in mind, don't just assume that your tax situation is normal. You need to keep this in mind. Okay, so this was passed. We highlighted these different things. The other thing that we did not cover yet is, so there is another part of the CARES Act. This is not necessarily related to the PPP loan, where you could elect to defer paying the employer share of FICA and Medicare. So this is basically the 7.65% that you, the employer, pays on your employees' wages. You can defer that, and then you would pay it back in, you can defer it to the end of 2020, and I think you pay it back over 20 in 2 payments, December 2021 and December 2022. It's been a while since I looked at that. I could be wrong. It could be half December 2020, half December 2021. You can certainly take advantage of this if you're concerned about cash flow, especially if you've been a business that hasn't been able to operate or be open right now. You really want to preserve your cash. However, that's not forgiven. That you have to pay back. So that's a debt that you're going into more debt for that. But if you think that your business is going to recover, you're going to open, things are going to come back, for cash flow purposes, you might want to take advantage of this. Prior to this legislation, what they said is once you can do this deferral thing, but once you find out the funds are forgiven, you can no longer defer the payment. What the legislation says is you can do both. You can get forgiveness, plus you can defer the payment. And the reason is FICA and Medicare are not expenses that you're going to get reimbursed for. They can't be forgiven, so you're not double dipping. So that was the other change with the provision. You know what? Everything I just told you, it's going to change. It's going to change over the next week to 3 months. It's been our experience ever since this started coming out. For the most part, the changes have only helped businesses. Congress wants to get the United States business economy up and running. If there are changes, they are not likely to be more punitive. There is a lot of paperwork. My hope is that perhaps some of the paperwork will be more simplified. The amount of time that some of our clients have spent on this to try to manage their business, stay on top of this, manage their money, figure out what's going on. It's quite a bit. I know it's been stressful for a number of you to know what, it's like you're playing a game, but you don't have the full rule book. But if something does change, it probably won't get worse than this. I would encourage you, if you get to the point and it's been 12 weeks and you've reached the forgiveness amount and you're happily sitting in the 60% and 40% and everything's really clean cut, go ahead and apply for forgiveness. The sooner that you know this loan was forgiven, the sooner you can go forward without that, kind of, hanging around your shoulder. So more questions. This is, we can go back to different slides if you have questions.
Yes, we have a clarification from one of our CPAs, Michelle, indicating that the repayment of the payroll tax referral is 50-50 in 2021 and 2022.
Excellent. Thank you so much, Michelle. I was hoping somebody from the office would look that up for me. Good.
And then we have another question. Will we need to provide copies of our bank statement where the money was put for forgiveness?
I can't remember. I pulled up the application on my phone so that I could refer to that if I had any questions. Let's see. And this is a call out. This is like call a friend. So if there's anybody from B Bergvall that can find the answer faster than I can, please jump in the chat box and let Liz know. Okay.
I have everybody muted, so chat me if you want to be unmuted, if you can't unmute yourself.
And just remember, like no question that you ask, this is all really confusing and really hard to stay track of. So no question that you ask at this time period is a silly question because it's very confusing and there's a lot going on. And you can always chat your question privately to Liz, and then nobody else on the line will see your question. Even people from B. Bergvall can chat privately to Liz if they don't want to see their questions. So that's there.
And then we have a clarification. I'm going to put it back in the chat box regarding that sole member LLC with the 0.9325%. Is that over the entire loan period?
It would be for the 24 weeks. So it would be your revenues and expenses, revenues less expenses over the 24 weeks, and then whatever that profit is. And, you know, for this particular answer, I really encourage you to either follow up with us offline or to talk to your own accountant, because the whole thing with the self-employed and people who are partners is a little bit different than the rest of this is. I am not quite finding the documentation, so we'll get back to you on whether or not you need the bank statements. One of the questions that came through with the registration was about the EIDL loan and, you know, where that would be subtracted. If for some reason your forgiveness is reduced because you couldn't maintain your FTEs and you didn't meet any of the exceptions, whatever the so you're going to get this calculation. This is what my forgiveness is. So let's go back to our example. You were loaned $100,000. You calculate your forgiveness at $80,000. If you got an EIDL grant for $3,000, that grant will come off that final total, that $80,000. will be 80 minus 3, and then your forgiveness, your actual forgiveness will be $77,000.
So let's see. I received an EIDL grant as well as a PPP. I understand the amount of the EIDL is subtracted from forgiveness. Is the 60-40 split figured on the total of the PPP loan or the PPP loan minus the EIDL amount? It sounds like you just answered that.
Yeah, but you know what? I'm so glad you asked the person asked that question though. The 60-40 split is actually on what you spent. So if you ended up spending, again, back to our example, let's say you spent $80,000, at least 60%, it would be on the spend. So if you spent $80,000 between payroll and your other expenses, at least 48,000, 60% of 80, at least 48,000 needs to be on payroll. So the 60-40 is on your spend, not on the award.
And just a reminder that this is being recorded and we will upload it to our B. Bergvall & Company website, bbco-cpa.com. And so you'll be able to view this again later. And we have a clarification here that says, the SBA form says for payroll documentation, bank account statements or third-party payroll service provider reports documenting the cash compensation paid to employees. That's what we're seeing about documentation. So bank account statements or third-party service provider reports documenting the amount of cash compensation paid to employees.
Great. Thank you so much for the person that sent that in.
That was Jackie from our office.
Oh, thank you, Jackie. Shout out to Jackie. When you look at, I mean, I know some of you are hearing about the changes for the first time, or maybe you saw it briefly last night that the Senate passed it. But what are some of the things that are going through your mind as you're processing how this affects how you're going to run your business in the coming month?
I'll just wait and see if anybody pops anything into the chat. Let me just go through a couple questions while we're waiting for some additional chat comments that people posted when they registered.
Okay.
Are we seeing anything regarding funding for 501c6s?
We have not. There has been some advocacy work on the part of the nonprofit community to get, so 501c6 are typically membership organizations like a chamber of commerce or, you know, like the Engineers Association or the Bar Association. The chambers of commerce have been such big heroes during this time. They've gotten some information out. The US Chamber of Commerce has the best, like when all this was happening in the beginning, they had the best of anybody's summary about what was going on. They've been fabulous about keeping the community informed on different things. And it's just, you know, they have employees just like anybody else, and they're providing a greatly needed service at this time. So hopefully the 501, you know, something will open up to the 501c6s. If you're on this call and you have not yet applied for the funds, there are still funds available. I think Liz had mentioned earlier, one of the questions was somebody was having trouble hearing back from the bank. Get in touch with Liz. We have a fabulous bank. I have to say them by name. Quaint Oak Bank in Southampton has been wonderful. We had a number of clients who had trouble with their own banks. It's as you can tell by the name, because some of you are thinking, I've never heard of that bank before. It's a smaller bank, so they're very personal. You talk to a real person. You're not dealing with a computer. Also, the Chamber of Commerce. So thank you to our host, the Lambertville Chamber of Commerce, and I think we might have some other chambers here. If you have any members in banking who would be able to help people with their loans, please pass that on. We do have a list that we're maintaining of banks who have said that they will take on clients who are, they will take on applicants who are not their current customers. So if you haven't heard back from your bank yet, call Liz, we'll get you hooked up with another bank. One of the things, okay.
I was just going to say Bank of Princeton has been very supportive.
Oh, wonderful. Good, good. So that's good to know. One of the things that you might want to think about, again, this is something to think about. Please consult your accountant before moving forward on this. But now that you have 24 weeks, the most important thing for your employees is that your business is still around a year from now. So if it means that you're slower to bring your employees back to increase the chance that your business's longevity will remain intact, you might have been in the mindset for the last 6 weeks, I have to bring my employees back by June 30th. And so this sense of, even if we don't have enough work, I just have to find something for them to do so that we can get as much forgiven. And I want to get everybody back. It's going to mean a lot to them. You might want to think, do you bring them back slower because you have more time? You can protect your cash flow, and now you can better match the production that your business has with the payroll of your people. So give that some thought. It's kind of, it's like you've been going like this, and then all of a sudden, like, oh my goodness, like everything just changed, as it has been pretty frequently for all of us. But stop and pause and think, is my strategy still makes sense now that I have 24 weeks to spend the money, and I have until December 31st to kind of true everybody up. My only caution is, this just came out last night. Go back to this. You know, this slide where I'm saying this is very likely to change December 31st. That's what I'm basing that advice on. Once that advice is firmed up, you really want to think about, do I have to bring everybody back super quick now? So give that some thought. If anybody else is thinking about business strategy as it relates to this forgiveness, or things that you might have wrestled with, you know, feel free to jump in. Even if you have advice for other people on the line about how you've found managing this to be helpful, feel free to jump in. We have about 5 more minutes. Okay.
We have a question. When this was going on, I was in the process of hiring part-time. I was not approved for that position since a role was not currently considered for the PPP, will I be able to apply to the PPP again for that position when I rehire?
Oh, that's a really good question. That would be a really good provision. The PPP, depending on your bank, was either based on the annual year 2019, or some banks ran it from April 1st, 2019 to March 31st, 2020. So unless that, if your bank ran it through March 31st, 2020, since that person wasn't there before then, no, you would not be able to get more money, at least the way things stand now. We're going to close out the session then, and thank you so much for your time. And again, reach out to us with any questions, and the best of everything to those of you who are getting to open tomorrow. We're really excited for you. I know it's been a rough time. Take care.